What a family, man. It's your boy, man, Kanye Effects, and I'm back at it, man, with another banger. Now, listen, we have Usdjpy on the screen, and let me just do a trade breakdown on what I saw. And yeah, man, just make sure you like, subscribe, and hit on the notification bell to get notified every time I drop. And yeah, and please like, guys, like, Ish, so it could reach me a lot of people. Like, even if you don't subscribe, like. So starting on the 4 hour time frame on USDJPY. If you just check my previous videos on USDJPY, everything that I've predicted on USDJPY and other forex pairs that I trade like GBP USD, Euro, US dollar happened, right? It happened exactly the way I predicted. From this overall moves down here, everything that I said would happen happened. So if I just remove everything starting on the 4 hour time frame, right, we have a breaker structure here. So we have a breaker structure. First things first, context, right? Context is simply your market structure. Where are you going? Where are you going? That's market structure. So on the daily, you see, so this, I'm on the 4 hour, but this is the daily leg or whatever. So we have a breaker structure, and I'm trading from the swing low, right? The swing low to, if I just clone this, shit, sorry for that, guys. So first things first is your market structure context. So we have a breaker structure, and I'm trading from this swing low down here, right? Trading from the swing low, yeah, trading from the swing low to that swing high up there. Let me just adjust this for a minute, and yeah, right. So that's my swing high. So let me just change that to swing high. So I'm trading from this swing low to that swing high, and if you just check, we have this whole, we have this liquidity, trend line liquidity, or what you call it. But here we have all this trend line liquidity, and we respected a level of demand down here. So this is our level of demand that we respected, right? So let me show you something. So since you're trading from that swing low to that swing high, we respected a level of demand on the 4 hour time frame. And if you just drop down to the 15-minute time frame quick, what I saw is that, okay, price is pulling back, right? So since price is pulling back on the 1 minute time frame, we have a breaker structure here. So on the 1 minute time frame, we broke structure and we changed character at these levels, right? So we changed character at these levels on the 1 minute time frame, right? So we had a change of character. Bear in mind that on the 1 minute time frame, we broke structure, changed character, we pulled back, right? After pulling back, we broke structure of this high, broke structure here. So we have a breaker structure. And what I was looking for, I was looking for price just to pull back to this order block down here, right? Which that didn't happen, and we ended up breaking structure again. So I was like, okay, we need to be flexible, guys. We need to adapt to the current price, right? So we broke structure, and I was like, okay, shit, we're trading from the swing low, right? On the 15-minute time frame, we're trading from this swing low to this swing high before we broke structure, guys. Bear in mind, this was before we broke structure of this high. We're trading from the swing low to the swing high, and what happened is that price came to our 15-minute order block, right? So we had a 15-minute point of interest. Price tapped into our 15-minute point of interest we took out these relatively equal lows, right? So we had relatively equal lows down here, another form of liquidity. So we took out these relatively equal lows, tapped into a level, and if you just drop down to the 1 minute time frame, what I'll show you is that after tapping into our point of interest, right? After tapping into our point of interest, after tapping into our point of interest on the one, sorry about that, guys. After tapping into our point of interest on the 15-minute time frame, I dropped down to the 1 minute time frame to identify what I'm looking at, right? So what I saw is that price broke structure here, right? So we have a breaker structure. So we have a breaker structure and a change of character, right? We have a breaker structure, change of character, and what I was looking at, let it click for a minute, guys. Gosh, we have a problem in here. We have a problem. I don't know why it's doing like this, but like it. So breaker structure, change of character, and let it load for a minute. Let it load for a minute. I know what's happening. I know what's happening. So after breaking structure, so on the 1 minute, as I've said, we broke structure. After tapping into our point of interest, I dropped down to the 1 minute time frame. We broke structure and we changed character, right? We broke structure. We broke structure and we changed character. And I take my entries on the 5 minute time frame. If not on the 5 minute time frame, I use the 3, but mostly the 5 minute time frame. After breaking structure, we changed character. I went up to the 5 minute time frame, and on the 5 minute time frame, I identified liquidity. Right? I was like, okay, we have these relatively equal lows down here. We have these relatively equal lows, right? We have this relatively equal lows, or a double bottom. We have this double bottom, and I was like, okay, I'm going to take this whole supply level because we have a sell to buy before we change character. So this is our supply level that caused the change of character. So I took that supply level and I took my entries. First target is 1 to 5, just to pay yourself for your competence, right? Just to pay yourself for your competence, man. Right, stops just below the lows, just below these lows. And you target a 1 to 5 first, right? Target a 1 to 5. You target a 1 to 5. 1 to 5, 1 to 5, 1 to 5, 1 to 5. So this is a 1 to 5. 80% of your profits, you take them at the 1 to 5 hour trade just to pay yourself for your competence, you know. So I took a 1 to 5, paid myself, and I took the rest to full TP at the 15-minute swing high. So that was the setup, easy, simple. So took a 1 to 5 hour trade. It was a beautiful setup, and like, yeah, man. Right, took a 1 to 5 and just check our swing low. After breaking structure, you move your swing low, right? So I moved my swing low even. So I moved my swing low and I'm trading from this swing low after breaking structure, right? Trading from this swing low to that swing high update, trading from that swing low down there to that swing high update. And what I saw, so that's my swing high, right? Shizness, bro. So what I saw is that, okay, I'm trading right now, currently I'm trading from the swing low to that swing high up there, and I'm looking for price just to pull back to these levels, right? Because number one is your market structure context, number two, supply and demand, number three, liquidity as a cause. So if you just check, we have relatively equal highs, equal lows, we have relatively equal lows, or another form of liquidity. So we have liquidity right here. So I'm looking for price just to pull back to these levels, not these levels. I'm looking for price just to pull back to this fair value gap, right? Or imbalance, whatever you may call it. And what I saw is that, okay, price is pulling back, right? So when I saw this move down there, I dropped down to the 1 minute time frame to trade a 15-minute pullback after we broke structure, just to trade a 15-minute pullback. So let me show you how to trade a 15-minute pullback. And yeah, guys, let it load for a minute. I tell them let it load for a minute. I tell them let it load. So if you just check on the 1 minute time frame, we have this breaker structure, right? We have this breaker structure on the 1 minute time frame, and we change character at these lows. So that's showing us that, okay, sharp, the 15-minute is actually pulling back. So after we broke structure, change character, the 15-minute is, we saw that, okay, sharp, the 15-minute is pulling back. And number two is your supply and demand areas, right? So usually I take entries on the 5-minute time frame, so what I saw is that, okay, where am I looking to take my entries from? And I saw that, okay, we have this supply level. Why this supply level? Because we have imbalance at this supply level, right? We have fair value gap, and we have this liquidity or trend line liquidity, as you may say. We have this trend line liquidity. So I took my entries, right? Took a short, stop loss at the highs, and I took a 1 to 5 R trade, right? 1 to 5. So that's a 1 to 5, and if you just check, it was a beautiful setup, guys. Took a 1 to 5 R trade, beautiful setup. Price came back. Just check, price came back, but I'm thinking that it's going down, so I'll just target this level. If price changes character from here, then I'll take at the highs. 1 to 5 R trade, and I was out. Simple setup, beautiful, easy, and yeah, that's all. Tell me if you want me to post a SketchUp of a full SMC course, or should I open a signal group for you guys? I don't know, but like, yeah, comment on my videos. I know the quality is low, guys. I'm working on it. Yeah, I'll see you all on the next one.